can you handle this every month? You know, are you going to be
Sure.
struggling to make your payment every month? Are you going to be calling me being like, Chris, like I can't make the payment and we're 4 months in.
This is the number one fear. How can I get into 2 mortgages at the same time?
Yeah. So they're getting married and then they're negative like 20 grand.
Life situations. I think that's what you're describing. It's like marriage, divorce,
If you have
breakups,
kids, and
kids.
I guess I get
That
it.
still
but
happens.
Yeah,
That still happens.
Yeah, it still
right?
happens. Now they're broke up and they can't get off the loan or they have to sell the home and now it ain't worth what it was. It's an issue that I'm seeing.
Yeah. Hey, we got a phenomenal deal on the purchase price, but we still couldn't close the numbers.
Welcome to today's episode of the J&R Homes Podcast. We are so happy you are here. Like this video, subscribe for new videos every week. Thank you, Joshua and Chris, for being with us today.
Yeah, we're glad to be here, as always.
Yep.
Yeah.
Happy to be here. Happy to be invited.
Wonderful. Today, this video is for you if you are on the market to buy a new home, if you've never taken a loan, a mortgage before, you are a first-time buyer. We have news for you. We're going to talk everything about FHA loans. Why should you buy a house now? And what are some of the mortgage types that exist out there to support your journey? Welcome, Chris.
Thank you. Thank you. Thank you for having me.
Yeah, we're really glad you're here. Thank you. We had the pleasure of doing some business with you, and you also help some of Raquel's other clients. And so today, with rates and all the different things that are going on, we run into a lot of different people, either that are in a house and they're thinking about moving, and so they feel stuck, with the rates and all the different things, especially depending on. And so we just went through this process with you where we have a house and we bought another one. And so we just want to talk to you and see if you could share with us the process you go through with when someone's feeling stuck, maybe looking at this option of, hey, we keep the one we have and then move into look to buy this other house and then maintain both of those. Do you run into that a lot? Do you have experience doing that? I know you did it with us. So.
Yeah, I run into it quite often. And a lot of people that bought, in 2020, 2021 during the COVID, days that they, they got those 2.5 rates and all that kind of stuff. So I run into that often and people do feel stuck. I've got people that bought homes that now they've outgrown them with the kiddos or their job actually moved a little further away and they don't want to give up that rate. They love paying that sub $2,000 a month mortgage. And that's just not, in today's times, it's just not doable for a lot of people. I'm constantly hearing this scenario.
Yeah. Raquel, tell us about some of the, you have clients that you work with that are considering different options and tell us the mindset that you're going through or kind of the different dialogues you're going through there and how that plays into what Chris is talking about.
Yes, definitely. We have clients today in that position saying, Raquel, I want a new home. My kitchen, I cannot stand that anymore. We have now 2 kids in the house, right? I want to move somewhere else, or the schools have changed and we want something new for our family. And so they say, help me to sell the house. But wait, I'm not sure if we can get a good price right now. Let me wait. And therefore, people are simply sitting and waiting on the fence to wait and see what Austin market is going to do, right? And we all know this is not a good strategy. So today's episode is about helping you to find a solution to this. If you are on the market to sell your house and you are afraid it won't sell for your bottom line, this episode is for you. So Chris, we went through this recently where we came across an incredible property and you helped us. We did a new rental unplanned. Of course, this is part of what we do. We turned that property into a rental, and therefore we did not have to lose out and miss an opportunity to buy a new home, but rent out our primary residence. And you help us to do a new mortgage so we would avoid those scenarios. So let's start diving into that.
Yeah, Chris, when if we were going to bring one of the clients here that was inquiring and looking at options about the house they currently have and they're concerned maybe I can't get what I need, how would you approach them if they were looking at this option? Well, maybe we're going to maintain the property we have and then look at acquiring another one. So when you go through that, and this is maybe the first time they've done this, How do you approach your clients like that?
Well, the first thing we have to do is have a conversation. Like I have to talk to them. I have to see where they're at. I have to see what kind of job they have. I have to see how long they've been in their current home. I have to see assets they have. I mean, it's basically the application process, right?
Sure,
So I have to go through those things, figure out if it's even doable, because then in my mind, I'm already working. Okay, in y'all's case, I mean, we didn't have a DTI worry. We didn't have, and when you have somebody that makes good income, W-2, or I mean, even self-employed income, but when you have somebody that has good income, their DTI is no worry.
Mhm.
I mean, literally there's some people I can look at for you example, and I can say, you can go buy what you want. I don't care. Go buy what you want. And here's your pre-approval.
Yeah.
But that's not the case most of the time.
Sure.
Most of the time we have to actually, go through the application process, see where their DTI is, get their income in, and see where they're sitting. Other scenarios too that are great that I've done before. So let's say that
One second before we go there, just to clarify the word DTI. So obviously, I know what that means.
Yeah.
But
debt
just
to
for
income
people-
ratio.
Okay,
Yeah.
great.
So your debt to income ratio. We actually have two barometers that we use for that. There's the front end and the back end. The front end is the housing ratio, and then the back end is your housing ratio along with all of your bills. So conventional is 49.9. We can't go above that. So it's like half of your income.
Yes.
Typically don't tell people like, hey,
Yeah, so let's walk through that. I'm going to unravel it just a little bit, and you can correct me if I'm wrong, because we're trying to think about, hey, these are new things to think about, like so debt to income, and you talked about the front end. So when you say the front end ratio, so that's the house payment.
correct.
Okay, so if the house payment is, I'm just going to make a number up, less than 25%, or some other number, whatever is appropriate for the loan itself, and then you talk about the back end ratio. And the back end ratio is that house payment or house payments and all of the bills added together.
Car payments, student loans, credit cards, all that kind of stuff.
Gotcha. So they just pile up all your bills. And,
Correct.
And then just for clarification, it's gross income or net income?
It's gross.
Okay. So not recommending what people should do, but just simply saying, hey, this is how they calculate.
People are going to do what they want to do.
Sure. We've noticed.
So people do what they want to do. I can give them my professional advice. If I look at a file and I'm like, oh my God, like these people are going to be stressed out every month, Obviously my job is, if Raquel sends me a lead, that's me. I'm trying to hand her a paycheck, right? But at the same time, I feel like, I have some ethical, idea of what I'm trying to do too, is I don't want to stress out a family and all that kind of stuff. So sometimes I might be like, why don't we look a little less, or something like that, maybe just to, can you handle this every month? Are you going to be struggling to make your payment every month? Are you going to be calling me being like, Chris, like I can't make the payment and we're 4 months in, and I'm like, what are we doing?
Right. And in fact, Chris, this is the number one fear of some homeowners out there, right? Saying, how can I get into 2 mortgages at the same time?
Yeah.
And, I either have to sell my house, which we know it will bring a contingency on the offer now when we go put that offer, or do I rent that house first? Raquel, help me out. So from a financing perspective, you talked about overall, we cannot have an over 49% debt to income ratio. Is that correct?
Correct. 49.9. I mean, that's typically where it's at. Now, I will always look at the file and I will always look to see like, okay, if there's something we can pay off.
Yeah,
Is there a $13,000, car payment that's costing you $800 a month, but you're wanting to put down 25% on a new home? Hey, let's pay off that. Let's get the DTIs down. So I'm always in my mind, I'm always trying to work like, how can we make this, happen? But anytime I get this scenario, someone trying to buy a new home when they're living in one, I'm listening to their story. I'm trying to already problem solve in my head while they're talking to me what it is that we need to do to make it happen and how I'm going to approach it. There might be several options to approach it, but I'm obviously going to give them my professional advice. And then it goes back to people are going to do what they want to do, because that's typically what happens.
Yeah.
Yeah. Very rarely do they actually be like, Chris, I think, and I'm like, now I do have some people be like, I didn't know about paying that off. That might be a better idea. Like, yeah, it opens up $800 a month in your cash flow, so there's ways to work it, but we just have to figure out what program is best for them, or, what other options we have. We can talk about all those later. But
yes, definitely. So get in touch with us. We will get you connected with Chris. We're going to leave his application here on the links below. We can't wait to serve you together in the Austin market. We hope you are enjoying this content. Remember to like, subscribe, share, and help our channel. And if you are moving to Austin or Boston, make sure to get in touch with us through the links on the description of this video or reach our website with all resources and information on how to get started with our team serving you in Massachusetts and Texas. And so, Chris, I mentioned that's the number one fear people have, doing 2 mortgages at once, right? And then the second fear is my house is not even worth what I paid for, Raquel. How can I sell it? And so let's talk about that, right? Is it common that these days in the Austin market, we're seeing sellers having to come to closing day and yet put money down?
So I've seen 3 instances recently. One was y'all's, right?
Yep.
And then, not that y'all owed the seller, make that clear. I had a girl call me that I did a loan for her. I mean, golly, it was like 4 years ago. It was a new build out in Gerald, and I was actually the first house they sold. And she called me, and she's getting married, and she's wanting to move up to Kansas, and she's like, 40 grand, like equity wise. And so I immediately, like, I'm not making any money off of this. I'm just here to help, right?
Yeah,
because I want her to send me her friends, all that kind of stuff. I started problem solving it for her, and I said, what's the story? She's like, we're getting married. My husband is getting an inheritance it was a very large sum of money. And she goes, I said, well, how much does he make? And she told me, and I said, what's the plan when y'all move to Kansas? She's like, we're going to rent for a little bit and then we're going to buy again. And I said, are you still going to do the same line of work? And she said, yeah. And I said, okay, but he's going to be making this income. And I said, look, because she was asking about doing a short sale. You do a short sale, like that goes on your credit. You're not buying a house for a good while.
Yeah.
It's going to take a while.
Yeah. So to explain, you can correct me if I'm wrong. Short sale would essentially be having the bank that you owe money to allow you, forgiving a part of your loan, to sell it for less than you owe. And so effectively,
but they also throw it on your credit.
Yeah. So effectively, it's like, I won't call it a foreclosure, but almost like
it pretty much is like
it operates on a credit report like a foreclosure.
Correct. And so I was sitting here talking to her, and I was like, all right. I said, if y'all are going to be buying a house, there's a good chance they're going to need your income. And I was like, maybe not. That's great. I was like, but do you want to risk that, that possibility of not being able to use you for a really long time? And it's going to really tank your credit.
Mm.
So she was like, well, what do you recommend? I was like, honestly, if your husband's okay with it, I recommend, y'all are married and y'all are in this together. I was like, just needs to cut a check and get you out of it, to be honest with you. I said, I know it's probably not what you want to hear. It's not what he's going to want to hear. I said, but if y'all are going to buy a house together and you're going to need your income, he's going to need you one way or the other on this. So, there's that scenario. I have another person in the Wolfpack called me, and they were asking me on somebody that I did a loan for about 1.5 years ago. They're getting married. People are getting married, and that's the issue. So they're getting married, and then they're wanting to, they're negative like 20 grand. And so he was asking me like, how do we do this and whatnot. The other sad thing I keep seeing too, and I hate seeing it, is that a lot of people that bought during 2021, early 2022, when these rates were so good, they went into it with like their boyfriend or their girlfriend, or even married. But I hear about the boyfriend, and now they're broke up and they can't get off the loan, or they have to sell the home, and now it ain't worth what it was. It's an issue that I'm seeing.
Yeah, we
for sure.
Yeah, we on our side of the house, we usually call that opportunity.
I know,
but hey, so if you're looking for one of those, we have a good source. Let's talk about life situations. I think that's what you're describing. It's like marriage, divorce, breakups,
kids, and
kids.
I guess I get
that
it.
Still happens.
Yeah,
that still happens.
Yeah, it still happens though.
And so,
yeah,
it's and especially you talk about 21, 22, and if you know anything about the Austin real estate in 21 or 22, with the super low rates and a 40% appreciation, fast forward a couple of years and a 22, 23% decline, you have a lot of people upside down.
Yeah.
If you bought in that time window.
Yeah.
So here you are, you got a decent payment, but you got a high balance. And so,
And then not to even mention, I think how many people bought a home, but they actually put, an extra 30, 40 grand on top of it because it wasn't going to appraise for it.
yeah.
And so they're out that
Right.
cash.
Yeah. So you're talking about buying above, at the time because we had multiple offers and
Yeah.
it was just a really wild market
It was
at that time.
wild, wild west. It was crazy.
Yes, and it brings me, Chris, to the third fear too that people have is the interest rates are super high and they're not thinking of prices, right? Meaning, is it better for me to buy at a lower price regardless of the rate, or should I think of low interest rates only, right?
Well, let me ask you this. What's the best time to get into the stock market?
When it's low.
When it's low? They also have a saying is, when's the best time to get into the stock market is yesterday.
Yesterday. Yeah.
So you can wait if you want. I had a builder rep that I talked to. I was having a conversation with him and he was like, I kid you not. He goes, I had a guy come in that's been looking for 3 years. And I was like, why? And he goes, because he keeps thinking that everything's just going to magically come down.
Yeah.
And this guy is like, depending on his situation, he might have gained some equity in the house. He might not have. I don't know.
Mhm.
But, the rates have been the same pretty much for, last few years. We're in the 6s. And yeah, we touched the 8s real quick and then came back down in 7s, 6s. The best time to get in the market was, yesterday. You just got to get in and start, building that
Sure.
equity. I have people all the time that really do find a house that they love. And they're just like, hey, we'll just refinance later. The cool thing is everybody that I close for the life of that particular loan, I will waive my refinancing fee.
Excellent.
Well, I do my part for free. Have I done a lot of those? No, because rates just haven't
We've been going
really,
sideways.
Yeah,
really.
they've just been going sideways. I mean, it doesn't really make a lot of sense. I think I did a couple refinances in March or April that actually made a lot of sense for those people because we were able to drop their rate because I don't remember if the tariff thing came out in April.
Yeah, sure.
I jumped on it immediately.
Sure, of course.
And so I was able to grab some of those and help those people out. But I mean, rates just went right back up.
Yeah, well, let's talk about this a little bit because so we have this sell side, call it or whatever we want to call it, that's concerned about, hey, I'm stuck in my low rate, but I have this really high mortgage balance, and I'm concerned about that. And then they're staring at this other market that's like, okay, well, we've seen at least in the Austin area and surrounding counties a reduction in year-on-year house price. So let's say from peak to trough, it's in the 22% down from a cost of the house itself.
Mm-hmm.
And then we also see a lot of inventory, and then we see a lot of concessions. And so talk about, if you think about that, if I'm coming out of a house at a low rate, but I can't get out of that balance, but then I'm moving to a house that have someone who's willing to work with me on the other side, whether that's a new build or whatever, like what tools does that open up for you? Because obviously, Raquel, you ask for concessions, like rate buy down. You have one of those people who's in a situation and like, oh, I'm moving to Kansas or whatever.
Mm-hmm.
And then you're like, how can you use those tools to help kind of balance that out?
I mean, on the sell side, it's if you have negative equity. I just had this case just 2 weeks ago. This realtor couple, they busted their butt. These people were going to be pretty much negative equity on their home. They called me and they were like, hey, we got a cash offer on the house at ask. It's like, are you kidding me? And they were like, no, we did. We'd already had the contract lined up for the new one.
Mm-hmm.
But ahead of time when we went under, because it was a contingent offer on the new one, and I'd had the contract for like a month and a half. We went into that, to the buy contract was like, hey, you get me this amount of money, I can make this deal work.
Mm-hmm.
And I had it work to like a 40, what was the DTI? I mean, I was tight, but we had it worked. And they'd got me like 20 grand. I was able to, use that money towards closing costs and all that kind of stuff. But they had a family member gifting quite a large of money. And we were going to use that money, some of that money to help get them out of the current home.
Mm-hmm.
And then, use that for the purchase of the new one. Not everybody's blessed to have somebody give them a large amount of money to help them get out of one.
Sure.
On the sell side, I don't really know even what to tell you, to be honest with you, because if somebody is short, it's like, but on the buy side,
mm-hmm.
man, I tell all my agents, go get me 10 grand, go get me 12 grand, go get me 13 grand. And they're like, why? And I was like, because I can get them a payment in the 4s.
Yep.
Or I can do this, or I can get all their closing costs taken care of, and I can get them still a buy down. So there's ways to help. I just need to, I got to know what's on, you know, both sides.
Yeah.
Yes.
So go ahead.
And we are going to talk about a message for buyers here in a moment. I want to encourage you, if you are a seller today and you don't know how to go about this, get in touch with us. As your awesome realtor, I will do a free pricing strategy for you. I will come to your home, evaluate how much your house is worth today, and come up with a pricing and marketing strategy for us to get your house ready. At least take that initial step. Let's see what the market does. We are in the summertime here in Austin, and we have 5 months of inventory. What does that mean? It may take a while to sell your home. So if you need to buy that next house, let's get it moving. Let's get the process started so that you can now put an offer on a new house and be confident we are going to be able to sell your house. In case you don't want to sell your house and you say, let me consider being a landlord, this is now the fourth fear. People that have never done this before are super scared of getting into the rental market. And I wanted to ask Joshua, what advice can you share with people becoming landlord for the first time, taking out a new mortgage and making all this work in order to save their most valuable asset?
Well, I mean, I think that what I would say is you need to assess your plan and strategy, right? I would just really focus on that. So if in our case, Chris, that I would call it a house hack. We were more like, we have a property, we're moving out of one, we made a decision where we're going to turn that one to a rental. We moved out of our residence into the next residence. We had a really strong situation where we had $120,000 of equity in the other house.
I got such a good deal.
So we said, well, we need to go ahead and move forward. It was a good decision for us, and that's why we moved that direction. So we used a house hacking strategy. So it's like, hey, if you're thinking about doing this, be clear on what that is. The other side of it is, I want to be an investor, right? The house hacking strategy opens up a different set of capabilities, meaning we can use primary residence loan products, lower money down, all of those things. So, hey, that's one strategy. The other one is, I want to buy an investment property. And so that's like higher money down, different things like that. And that property, if you're looking at it from that perspective, you want to look and make sure you run the numbers so you have cash flow, or at least close to cash flow. So you need to find a good deal.
Yeah, which more than likely right now, I mean, a lot of people don't.
Yeah. I mean,
there are deals, don't get me wrong. But I get these people that call me and they want to be an investor. And I'm like, you're not an investor. You're just wanting to say that.
Well, I will tell you, so these are true numbers. The determination on the property that we purchased, the actual thing that caused us to move into it was exactly along the lines of what you described. So we looked at the house we were going to buy that was going to have 125,000 of equity in it at the day we closed. It was going to break even on cash flow, even though we got it $125,000 under market.
And that was doing it as an investment.
That was doing it as an investment. Yeah. And
so it made more sense.
So moving out of the property that we lived in, we actually had a much higher cash flow, and it was at the neighborhood we moved out of could rent for higher than the neighborhood we were moving into. And so talking about that, it's, hey, we got a phenomenal deal on the purchase price, but we still couldn't close the numbers.
Mm-hmm.
And we did a 30-year fix, and we had a really great rate, even as an investment property for the market that we had. So it's a challenge.
Mm-hmm.
It's very challenging right now to get in this market generally to cash flow. But that being said, because of the situation we were in, we were able to use that kind of house hacking strategy. We've used that in other occasions before, so we're familiar with using it to do what we do. But if you're looking and thinking about that, the very first thing is understand, have a general idea, and then talk to Chris about, hey, what are my financing options here? Do I need to move? And hey, it's okay, I'm going to move up in property. My other one actually, what does that look like? Raquel's like, well, here's rental comps in both places. Oh, keep your, maybe we do a cash in. I know y'all don't probably do that a lot, but hey, on my property I'm moving out of, maybe I do a principal reduction and maybe a recast, so I can get the one I'm in and use that low rate, and then we can work with you to go buy another one. And when you put those two numbers together, you're in a much better place, because you talked about like, how do we make the DTI work and how do we do those things? So that's part of the conversation with you that I think you can really help those individuals with. But anyway, those are the things that we are more intermediate investors. So we have multiple properties and we've done house hacks and we bought straight investment properties and we've done those before. So it's a little different conversation, but it's a combination of both parties. It's do the rent comps work? Where you're going, where you're at? Do the financing work? Do you have the right mix of, hey, don't buy the new car. Why don't you pay off the old car? Those kind of things to make the numbers work if that's what you want to do. But the key is you want to be an investor.
Yeah.
Like I said, what we'll tell you is that there's deals to be had. So you just have to be looking.
You got to find them.
Yeah, we look all the time.
Yeah, y'all look all the time.
So we knew, and it's funny because we actually were looking at another property that you were looking at helping us with, and we ended up finding this one. And so anyway, Chris, you're great about that because that was a more complicated purchase, the other one, and ended up working out really well for us.
Yeah.
So.
Yes, we had a wonderful experience with Chris and the entire team at Pilgrim Mortgage, and we're leaving that information for you here so you can understand what options you have when it comes to buying a home or selling your existing one and yet acquiring a new property. And remember, Austin prices are all relative. It really depends on the neighborhood you are in. If we have a lot of houses for sale in that neighborhood, how long is it taking for those houses to sell? Medium days on the market. If we don't start seeing movement with your house within 15 days, 30 days, we have to come up with price reductions. And so as your realtor, I will ensure each step is taken care along the way to protect your assets.
Yeah, absolutely. Absolutely. And I think for both, the one thing that you and Chris both share in common is it's about the individual and the individual situation. Those people who
that's why I said it's a conversation. You gotta start the whole process with a conversation and figure out what it is that you can help these people with. Because some people you can't help. There's just people call me and they want to buy a house. And I'm like, well, how much money are we working with? I have $2,000. Well,
definitely. And there's also a lot of sacrifice. We talk about making sacrifices along the way, right? We could have bought yet another car during this time, but because the house opportunity came along, Joshua said, let's jump on this deal. Let's get into this property. We're going to rent it. We have a whole video telling you why we decided to move to this house. So watch that. But yes, here are some ways people can avoid to selling in a down market. Get in touch. We are here to support you.
And don't limit your options, right? I think what we talked about, Corley, in this conversation is life events happens, marriage, divorce, children, all of the things that happen in life, job change, all of those things. And so you're not limited to.
Well, what you just said is a few reasons why people do have to, that's what you're saying.
Yeah, they all of those things.
There's diplomas, so it's like divorces, there's the 5 Ds, whatever they are. Death to
drugs, to divorce.
So there's all those reasons that why people, do need to move.
Definitely.
And then there's the ones we like the most. Oh, we're actually wanting to invest in real estate, which that's not in the D column. It's like, this is our desire to do.
Desire is good.
Yes, definitely. So before we close out, let's share how people can best prepare to acquire yet a new mortgage and acquire a new property from a financial perspective, right? We talked about buying cars and things of that nature. Or are some things people should not do if they are considering a new mortgage, Chris?
Well, we just don't go buy a new car. So I get this question a lot when people do the application. They'll be like, hey, it's going to do a hard pull on my credit. It's going to knock my credit down. That's not necessarily the case. Now you've seen those people. I've gotten applications in before where I pull their credit and it shows me they had 32 inquiries on their credit in the last 2 months. What that usually is they went to a car dealership and that car dealer couldn't get them approved. So they just ran it through every financing bank they have. That can knock your credit down. It's when you start getting those finance pulls, those automobile pulls, they're different types of mortgage reports. So don't go buy a car. Don't start applying for a bunch of credit cards. Let's try to get your credit score up. Save, because people don't realize when you're buying. Are we talking about investments right now?
Either one.
Okay. Well, obviously you need to save no matter what when you're buying a house. I do get people call me and I'm just like, how much money are we working with? And I'll be honest, I have $1,500. That's not even enough money to pay earnest or option. Now, are there programs out there, down payment assistance? Yes, but people don't tell you is that you still need some money. for closing costs and whatnot. Now, yeah, we can ask the seller to pay for all that, but save as much as you can. If you're looking for an investment property, you need to at least put 20% down. You can put 15, but you're going to have mortgage insurance. Your rate's going to be terrible. So at least do 20%, 25 or more is better. So save, protect your credit, save. Just be looking for good deals. To be honest with you, that's my advice.
Excellent.
And then talk to a lender, because the lender can actually ask more detailed questions on your scenario, because you might have a job where you just started. I get people that'll call me and they'll be like, hey, my base is, 150, but I've been here for 6 months and I'm making, 10 grand a month in commission. Well, maybe they've never had commission before, so I can't use it. Oh, there's different income requirements.
Yeah.
Definitely.
Yeah.
Yes. Thank you so much for watching. We are so happy you tuned in today. Subscribe to our channel, like this video, share with your friends, and remember to get in touch with us through the links below and apply with Chris. He's ready to support you.